Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So on Friday there was dramatic performance based on the non-farm payrolls release. And actually, we have talked a lot about the volatility that we should get on the Friday, and we warned that maybe even some patterns might be formed. For example, the butterfly pattern that we discussed on Friday morning. So we said those of you who would like to take the long position here, you could suggest maybe the butterfly and could try to do this. Of course, it was some gambling around it because nobody knows what the numbers will be released. But at the same time, despite the pattern had been formed, the overall action was so fast and upward action has been reversed down so fast that, well, it's really very difficult to not lose the orientation in such environment. And it just another once more time shows why it is very tricky and not for everybody, the trading in the moments of the big releases. So what results we could get from the recent action? From the technical point of view, in the very short-term perspective, I would say that gold has more bearish moments, and based on the performance that we've got, I would suggest that we could get more downside action, at least to the previous lows. I wouldn't dare to say that we definitely will see the breakout of the 1720 lows, but currently we have the technical moments that suggest and do not exclude the chance that market indeed will drop back to the 1720. So this is first moment that we could say for a very short term. With a broader view, in general, despite the numbers that we've got on the payrolls, the bullish and in general positive mood and the sentiment on the market has not been broken totally. It stands not very positive indeed. So as we many times acknowledged in our weekly reports by the COT report, COT numbers that we're getting, SPDR fund statistics. So in general, it's not very friendly. But overall fundamental environment, even with the Fed tightening policy on the table, is still to not put too strict limitations to the gold and let it to fluctuate around the current level, even to generate some bullish moments, as it was within the recent couple of weeks. So, but mostly they will stand on the daily intraday charts. Speaking purely on the numbers, why this has happened? So, although the headline numbers were negative, and that explains the first reaction, you could see that payrolls was 3 times lower than market expects, but the previous month have been revised up approximately for the same 120,000, which means that overall numbers were not very poor. It was around 300,000. If you will take a look at the structure of the report, you will see that the bad number stands mostly in relation to government employment, while the private employment, as by the ADP report on Wednesday, as by the non-farm payrolls release, it was positive. It generated a lot of job places. And that was extremely positive because currently, as you know, the private sector is mostly hurt by the pandemic and it's rebounding up. It's very good. Finally, unemployment dropped to the 4.8%, and what is more important, wage inflation has jumped to the don't remember exactly the numbers, but it was 0.6% against the 0.4%, so in monthly basis. So it was the significant jump in inflation. If you will compound all these factors, you will see that report actually, well, it's not great, of course, but it's moderately positive, and it's quite enough and satisfactory to the Fed to keep on the policy, and that explains the reversal. So I always talk about this, watching for numbers, look at the core, not just on the headline. And that you will get the understanding what's going on. Now, what we could do currently? Well, on the technical side, I wouldn't consider taking the long position And the daily chart you need to consider together with interest rates. So if we'll take a look at the interest rates, you could see that interest rates totally ignored the headline and rally up right to the 1618 extension. So, and hits 1.62 target. And it seems that market stands in extension. It has completed upward bounce, so it means that it should go down. But not everything is simple as with this XOP target. So first of all, market has broken through the 618 major resistance. You could see definite signs of the acceleration. Trend on interest rates in all time frames, starting from the monthly down to the daily, stands positive. It means that when the nearest time we will see high interest rates. This definitely. That will press on the gold. That's the reason why I suggest that in the current circumstances, I wouldn't consider taking the new long positions by far. On the shorter term, in the fall time frame chart, we have some bearish patterns. First of all, butterfly, although it's aimed to the upside, but it is bearish reversal pattern. So once this has been completed, we've got wash and rinse. This market has just grabbed the stops that have been placed above this area and collapsed back in the range where it was standing. It means that it's fake breakout, wash and rinse simultaneously, and take a look, huge bearish engulfing pattern. So it means that currently, in such circumstances, we could use ultimate extensions of the butterfly. So we use the whole upward swing of the butterfly and calculate extensions to the downside. First one, 1736, another one, 1723. 1723 is approximately equals to the width or height of this consolidation. So you can see, as market shows the fake breakout, it means that it will try to break it in opposite direction. And if it will be successful, the target agrees with the extension of the butterfly. So I would say in the current circumstances, it's a very big chance that we will see market around 1725, around previous lows. That's why in current situation, well, personally, I do not want to take any long position on the gold market. For taking the scalp short, well, it is possible based on this hand and shoulders with some pullback with the stop somewhere above the 8 points. This is potentially possible. Also, guys, take a look at the fundamental report. There's lots of information, fundamental background, what investors think about gold, what they anticipate to be on the levels, and how they treat the current situation. So it could let you to look at the background on the overall situation on the gold wider. So, and let's see what will happen the next week. Hopefully we'll get some interesting patterns and setups for trading as well.